Hello. So yesterday we were discussing about the causes of inflation, right? We discussed there were primary causes as well as secondary causes of inflation. So what were the primary causes that we discussed yesterday were cost pull inflation and demand pull inflation. So demand pull inflation, what happens? When people have more money in their hands, their purchasing power is more, so there is more demand in the market compared to the supply in the market. So when the demand is more, supply is less in the market, the prices of commodities increase. So this persistent rise in the prices of commodities leads to inflation. So first one was demand pull inflation. Second one was cost pull inflation that we discussed. So cost pull inflation means what? So the raw material or the other input factors which are required to produce that product, their prices rise. Ultimately the price of the output will also rise. So this high price will lead to the cost pull inflation that we discussed yesterday. So two main primary causes, demand pull inflation and cost pull inflation. Now we will move a step further. So we saw increase in public spending. So when people have more money in their hands, they have more purchasing power. So there is more demand in the market compared to the supply. Again, then people spend more money when they have more money in their hands, and that again leads to inflation. We saw this also yesterday. Now we were moving further yesterday from this deficit financing of government spending. So what is deficit financing? Deficit financing means, see, if the government has funds from the public from taxes and other sources, direct taxes, indirect taxes, some funds government has 1,000 crore rupees to spend for the welfare of the people. But in this case, the government uses this 1,000 crore rupees as well as it borrows some money, say 10 crore rupees for the providing facilities to the general public. This 10 crore rupees is not the money from the government which the government has. It has borrowed this money. So this 10 crore will be deficit. Right? So deficit financing. So when government uses that money, deficit financing, for producing or providing facilities to the general public of the economy, what happens? It is taking more money in the form of loans. So that deficit financing of the government leads to inflation. We will see, read this how. Deficit financing and government spending. Government spending increases beyond what can be financed by taxation. So we discussed it from direct taxes and indirect taxes. The government has a revenue of 1,000 crore rupees, but the government borrows, along with this 1,000 crore rupees, the government borrows 10 crore rupees for providing facilities to the public, general public. This 10 crore rupees is not from the revenue which the government has. The government is using it, taking a loan and then spending that 10 crore rupees. That 10 crore rupees is a deficit. In order to able to incur the extra expenditure, the government resorts to deficit financing. For instance, it prints money and spends it. This adds to the pressure of inflation. So what government does? It prints more money. So when it prints more money, ultimately again the general public will have more money in their hands. Again their demand will increase than supply and the prices will increase and it will lead to inflation. Production process and supply could be increased freely. Deficit financing of government spending. Now we will see
Hello.
increased. Hello.
हॅलो,
हाँ ये शैला.
तुमचा आवाज नाही येत मॅम.
शैला लास्ट टाइम पण काल पण असंच होत होतं, पण आज मी आवाज तर
तुम्ही
मोठा आहे.
ड्रॉप करता का?
एक मिनिट. आता आवाज येतोय शैला?
हॅलो.
हॅलो, आय एम ऑडिबल नाउ? हॅलो शैला, आय एम ऑडिबल नाउ? वॉल्यूम इनक्रीज करा. जास्तच वाढ. हॅलो, आय एम ऑडिबल नाउ शैला? ऑडिओ सेटिंग्स आर फाईन. हॅलो. Hello, am I audible now, Sheila? No response. Shit. Can't hear you. Hello. Now am I audible? Can you unmute yourself? Hello. Hello. It's consistent issues process. तुमचं एकच जण आहे अजून. Shit. हॅलो, टीम्सवरती आहे ना मुली. शैला ती म्हणते आवाज नाही जात तिला, तीच एकटी आहे. काल पण तसंच म्हणतो. हां. Sheila, am I audible? Can you unmute yourself and tell me? तिला मेसेजेस टाकते इथे. ती मला म्हणते की हां टाकलं ती कांटी वरी मॅम.
हॅलो
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 हॅलो हॅलो नाही
शेला एक मिनिट थांबा.
हो
हॅलो
नॉईज सप्रेशन नाही करायचं मॅम चालू आता बरोबर.
हॅलो हॅलो
नॉईज सप्रेशन चालू सप्रेशन
आपण हात सोबत नाही करू.
मी पण ड्रॉइंगच करते तशीच.
एकदा विचार करू शेला.
हॅलो शैला, am I audible?
हॅलो
हां शैला, am I audible now?
आवाज नाही येते मॅम.
गुगल मीटर चालू करा आणि
गुगल मीट बनवायचं काय? हां तसंच करायला लागेल.
उसको लिंक पे ज्वाइन करना.
हॅलो शैला, मी मेसेजेस टाईप करावं लागेल तिला इथे.
हो मॅम नाही.
ओके ओके. No ma'am, why she is singing? Camera failed.
Hello, Sheila, am I audible? Can you unmute yourself and tell me, Sheila, am I audible?
Chats this. म्हटलं दिसतं फक्त. You can see it on YouTube also, no?
जर स्क्रीन हे चेंज झाली तर तेवढं हे दाबलं ना स्क्रीन
हां आता क्रिएट
आता याच्यावरती लिंकवर
मिनिट ती दिसते का आपण बघूयात. पर्सनमध्ये आपणच आहोत, तिने जॉईन केले करते वाटतं.
ते गेले दिसते सोडून शैला पण नाही दिसत.
हां नाही आहे, होती तिने जॉईन केलं होतं.
केलं का?
मगाशी केलं होतं. नाव शी इज नॉट देअर.
आता कोणीच नाही दिसत. बोला आवाज येतोय का?
हॅलो.
तुम्हाला मी लिंक टाकल्यानंतर लिंक टाकून
कंटिन्यू करून यूट्यूबवर बघू शकतात ते.
ही कशासाठी टाकायची असेल ही?
या लेक्चर्स मॅडमला वाटतं ना मॅडम लेक्चर वेळ टाकतो
ठीक आहे आपल्याला सांगतो.
नाही तुम्ही फाउंडेशनचा लेक्चर वेळ टाका.
Now we have increased velocity of circulation. Increased velocity of circulation means what? We saw in last lecture. What was velocity of circulation? ठीक है ठीक है. So in the last lecture we saw what is velocity in relation to money supply. Velocity refers to the frequency at which we are using the money to frequently purchase goods or services. That was velocity. Now we will see how this frequency to purchase goods or services with that money is increasing. So in turn what will happen if the frequency to purchase goods and services with the available money increases, the demand for goods and services will also increase. Ultimately, when the demand is increasing with the supply remaining constant, inflation will rise. We will see increased velocity of circulation. Total use of money is equal to money supply by the government into velocity of circulation of money. What they are saying? In the boom phase, people speed money at a faster rate, right? In the boom phase, the velocity of circulation of money is high because in the boom phase, people have lot of money available with them. They have lot of purchasing power. So the frequency to use that money to purchase goods and services increases. So the velocity of circulation of money increases in the boom phase. Population growth. See, if a country has high population, ultimately to cater that population, the demand in turn, that population will have higher demand compared to a country with a lower population, right? A country with a lower population will have a lower demand for goods and services, while a country with a higher population will have higher demand for goods and services. So, when the population is increasing, the demand for goods and services also increases. So, when the demand is increasing, supply remaining constant, the prices of goods and services are increasing. This is leading to inflation. So, what wants to join the call? Hello, Sheila, am I audible?
Hello?
Sheila, am I audible now?
Yes, ma'am.
Okay.
Thank you, ma'am.
Okay, now we will move further. What they are saying? Hoarding. Hoarding means what? Storage of goods.
Ma'am,
Means,
on which
huh?
page number?
I am on page number 115.
115.
115. Okay. So they are talking about hoarding. What is hoarding? See, we say like onion. Like we say hoarding of onion. What does hoarding of onion mean? This year the production of onion was suppose a lot. What will people do? Now in the market the demand, the production of onion was huge. In the market the price of onion is less. So what they do, they store lot of onion in the storage godowns. So what happens if large quantity out of the production is stored but not sold away in the market, the supply in the market will ultimately be less than it should be compared to the demand, right? So in that case, what we do is that demand is high but supply artificially is reduced by hoarding, like storing it. So supply is less, demand is high, again the price will increase and there will be higher inflation. So in case of hoarding, that leads to higher inflation, hoarding of goods and services. So we will see. Excess demand is sometimes artificially created by hoarders. They stockpile commodities, they do not release them to the market. This leads to excess demand and inflation. What they do, they store that, what we see in case of onions also, right? They store that onion in large godowns and artificially reduce the supply in the market. So demand remaining constant, supply is less, ultimately the price of onions in the market will rise. So hoarding leads to inflation. Genuine shortage. See, if there is genuine shortage for the factors of production which are required to produce the output, ultimately their prices will increase. Their prices will increase, the output which we are producing using that factors of production, their prices, that output's price will also increase, right? So if the prices of output are rising, ultimately inflation will be there in the market. Due to why? The genuine shortage of raw material which is required to produce that output. Genuine shortage. If the factors of the production are in short supply, production will be affected. Supply will be less and demand price will rise, right? See, when there is shortage of availability of raw material, less output will be produced, supply will be less, demand will be more, and in this case demand is more, supply is less, price will be huge, and that huge price of consistent huge price will lead to inflation. Exports. See how exports are playing the role in the inflation part. If we are exports, if we are producing 1,000, 10,000 or 1 lakh kgs of onion come in the market, and out of them only we export 90,000 kgs in the foreign market, because we get more revenue from the foreign market, we will get more money, so we export a large part to the foreign market. We exported it to the foreign market, a large part. So now the domestic market has very less supply of onion, right? Only 10,000 kgs. So in the domestic market, the supply is only 10,000 kgs, but the demand for it is large. So in that case, in the domestic market, the prices of onion will increase, and that will lead to inflation. Clear, Shaila? Shaila, are you there?
Yes, ma'am.
Yes. Now we will see.
Although inflation primary causes तेच चालू आहे ना मॅडम?
Not the primary causes, other causes, secondary causes we are discussing. Trade unions. So how trade unions are playing a part in leading to inflation? See, as an organization, I have to pay certain wages for producing goods to the laborers. If the trade union demands to increase the prices of those wages of the laborers, what will happen? The salary of those laborers will increase, but my cost of production will rise, right? When my cost of production will rise, I have to increase the selling price, right, to recover that cost. So I will increase the selling price. In turn, the prices of goods and commodities will increase. Okay? So when these prices increase, ultimately it is leading to inflation. So trade unions, by demanding an increase in the wage rate, they increase the cost of production rise, ultimately the normal selling price will also rise, that will rise, so ultimately prices in the market are rising, and that is leading to inflation. Tax reduction. See, sometimes to make people happy, what the government does, it reduces the taxes. So when the taxes are reduced, ultimately what happens is that there is more money available with the general public to spend. Less taxes, more money in the hand of the general public. So when there is more money available in the hands of the general public, they can spend more, their purchasing power will increase. Ultimately, the demand in the market will increase, supply remaining constant. When the demand is high, supply was same, the prices will increase, and that will lead to inflation. Tax reduction. Government sometimes reduces taxes to gain popularity. What that happens? More money in the hands of the general public. This leaves more money in the people's hands. This leads to inflation if there is no corresponding increase in the production. See, if supply does not increase with that rate, the demand will be high and supply will be less. So prices will increase, and that will lead to inflation. Imposition of indirect taxes. So we have different types of indirect taxes like GST. We have to pay on, the government recovers these taxes from us from in the form of goods and services that we purchase, right? So when the government increases this indirect taxes, what happens? Ultimately, the tax component part increases. The tax component part increases means the price of that commodity increases. If the price of that commodity increases, what will happen? Ultimately, it will lead to inflation. Imposition of indirect taxes. Government may impose indirect taxes such as excise duty, value added tax, etc. Then the producers of sellers, what they do, they raise their price, raise the product price to keep their profit unchanged. So when the prices are rising, it will lead to inflation. Price rise in the international market. See, sometimes I have to purchase the raw material from a foreign market to produce my output. So in that case, if that raw materials price rises in the foreign market, what will happen? If that raw materials prices rise in the foreign market, I will also get that raw material at a higher price. So my raw material cost is increasing. Ultimately, my cost of production is increasing. So my cost of production will increase, my selling price will also be high. So when the selling price is high, compared to that, the prices will increase and that will lead to inflation. Price rise in the international market. The imported price of some commodities or factors of production may rise in the world market. It would lead to inflation in the domestic market. Non-economic reasons. See, some reasons like earthquake, flood, these reasons are the reasons due to which what happens? The available raw material required to produce the goods or services will not be available. There will be problems in the availability of raw material. There will be problems to bring the output outside the for transportation facilities will get blocked in case of floods, earthquake. The basic infrastructure facilities will get blocked. So it will be difficult to bring the raw material. The availability of raw material will be also less. So it will create bottlenecks in the production process. That is, bottlenecks means hurdles in the production process. And that's why when there are hurdles in the production process, the supply will be less. Okay, so supply is less, the demand will remaining the same. So in that case, the price will rise. Non-economic reasons. For instance, at times of natural calamities, flood, crops are destroyed, reducing the supply of agricultural products. Prices of these commodities tend to increase. Now we will see what are the functions of money. Shall I, any doubts up till now?
हॅलो
Yes, Sheila, tell me.
थोडं म्हणजे समजत नाही मॅडम, पण एकदा रिव्हिजन करेल मी, कारण कालच्या लेक्चरला ना काहीच ऐकायला नाही आलं.
Okay, fine. Means what I have discussed now, in that you have any doubt?
नो मॅम.
Okay, fine. We'll move further. Functions of money. Primary functions of money. The primary functions of money are really the technical and important functions of money. There are two types. Medium of exchange. See, what we saw in the barter system, yesterday we were discussing in the barter system, there were lot of problems. Like lack of coincidence of wants, like both should have that want to purchase that particular commodity. If only one person has the want to purchase that commodity and the other person does not have the wish or willingness to purchase that commodity, in that case the barter system was not useful, right? Because it did not have any standard form of money like which we have now as a standard payment of exchange. So money as a medium of exchange is a very powerful tool which is helping us to have a standard and acceptability form of money. We will see how. Money serves as a medium of exchange. Money facilitates exchange of commodities without double coincidence of wants. See, I was discussing the same thing. In the barter system, we had a problem like there should be coincidence of wants. Coincidence of wants means that both the person should have the want. If only one person has the want, for the goods or services, then that transaction could not be executed. But in case of money, if only one person has the want for goods or services, that transaction can be executed, right? Because we can pay, the other person can pay, other person will get the money, right? So that is the benefit of having money. A commodity can be exchanged for money. People can exchange goods and services through the medium of money. Measure of value. See, money as a form will be a standard measure of value, right? What we saw in the barter system in case of deferred payments, what was the problem? See, now I and you, Sheila, are going to exchange. I want rice and you will take wheat from me. I will take rice from you and you will take wheat from me. But what I said to you, we will execute this transaction after 2 months. Okay, fine. So fine, we will, after 2 months, we will exchange rice and wheat. But what happened after 2 months? The price of rice increased from 15 to 30 rupees per kg. Now, what happened? Either person will be at a loss. See, when I am giving rice to you, I am giving 30 rupees and in exchange I am taking wheat of 15 rupees. Means I am giving a higher value commodity to you and taking a lower value commodity. So I will be at a loss and you will be at a gain. Right, Sheila?
Yes, ma'am.
So that was the problem in case of barter system, in case of deferred or future payments, future transactions. So that problem is now solved with the help of money, because money has a definite measurable value which value doesn't change, right? So that problem is solved by money.
Money.
The value of each commodity is expressed in the units of money. We call it price. In view of this function of money, the values of different commodities can be compared and ratio between prices of different commodities can be determined easily. What are the secondary functions? Store value. So, another problem what we discussed yesterday in the barter system was the store value. See, if I exchange rice with and take wheat from you, I can do this. If I have large quantity of rice with me, I have to give it to large amount of people immediately, because rice is perishable commodity, right? Rice and wheat are perishable. After 2-3 months, their quality will get deteriorated, right? So within 2-3 months, I have to sell it out immediately to everyone. But is it that in case of money? No, money has a store value, right? It is not perishable. So that's why the problem of store value which we had in the barter system is now solved by money. Store value. The value of commodities and services can be stored in the form of money. Certain commodities are perishable. If they are exchanged for money before they perish, their value can be preserved in the form of money. Next we have standard of deferred payments. Money serves as a standard of deferred payments. In the modern economies, most of the business transactions take place on the basis of credit. Okay. An individual consumer or a businessman may now purchase a commodity and pay it for a future value. Right? What we saw, we were discussing in the barter system, in case of deferred payments, that is the transactions which will take place on a future date. If the value of rice increases or decreases at that future date, one party will be at a loss and the other party will be at a gain. But in case of money, since it has a standard acceptable value, in case of deferred payments, no party will be at a gain or loss. Each one of them will get the fair value, right? Transfer of money. Money can be transferred from one person to another at any time and any place. Now we will see contingent functions of money. Besides the primary and secondary functions, money has certain contingent functions also. They may be stated as follows. Measurements and distribution of national income. National income of a country can be measured in monetary terms by aggregating the value of all the commodities. Similarly, national income can be distributed to different factors of production by making payments in money. See, with the help of money, we are able to measure the national income of the economy. How we will measure? We are adding up all the sources of income and we will get the national income of the money, economy, right? But in the barter system, we were not able to measure the national income of the economy. Also, we are paying the factors of production in the form of money, right? If I am a manufacturer, I am paying my laborers, I am paying them in monetary terms. I am paying the purchaser of the raw material in monetary terms. I am paying my rent in monetary terms, right? So there is a standard and acceptable payment method with the help of money, which can be measured easily. Money equalizes marginal utilities productivities. The consumers can equalize the marginal utilities of different commodities purchased by them with the help of money. They can thus maximize their satisfaction. Similarly, the firms can also equalize the marginal productivities of different factors of production and maximize their profit. See, marginal utility, we saw marginal utility was the additional utility that we will gain by increasing one unit, right? So that marginal utility that we gain, we can measure it in monetary terms and we can maximize the profit. Basis of credit. Credit is created by banks from out of the primary deposits of money. The supply of credit in an economy is dependent on the supply of nominal money. It is not possible to create credit if there is no reserve monies. See what they are saying. Yesterday we saw, as a commercial bank, people earn some money, earn some income every month, 50,000 rupees. They spend 30,000 rupees, suppose, and they save 20,000 rupees. This saving of 20,000 rupees will now be available in a account in the commercial bank's account, in their account with the bank. So this saving is now available with a commercial bank. What the commercial bank will do? The businessmen who require loan or individuals who require loan, that available amount of reserve which is there with the commercial bank from the general public's savings, it will give it to businessmen in terms of loan. So it can only give this money in terms of loan if it has this reserve, that is the savings from the people. That is only they are saying. It is not possible to create credit if there is no reserve money. The commercial bank should have reserve with itself to give credit, to give loan to the businessman. That reserve will come when people save money and put their money in with the commercial banks, right? Liquidity. Money is the most important liquid asset. In terms of liquidity, it is superior to all other assets. Money is 100% liquid. So money as an asset is very liquid, and that is the characteristics of money which is helping us to easily purchase goods and services. Now we will move
Hello.
further. Yes, Shela.
तुम्ही ते राईट करताय का मॅडम? तुम्ही जे राईट करताय ना आता, म्हणजे जे समजावण्यासाठी,
हा.
ते ह्या स्क्रीनवर नाही दिसत आहे.
एक मिनिट थांब.
कारण तुम्ही आता ते लिहिताना दिसले ना,
आता
त्याच्यावर ते
दिसतंय?
काहीच नाही.
आता दिसतंय?
हा नाही स्क्रीन, नाही स्क्रीनवर फक्त ते मी तुम्हाला आता जे सांगितलं होतं ना, ते काय कॉजेस होतं ते कॉजेस ऑफ इन्फ्लेशन, तेच पेज दिसतंय.
म्हणजे स्क्रीन हँग झाली असं म्हणते का तू?
हा, तुम्ही मूव्ह करताय का तर इकडे ती इकडे नाही दिसत तेव्हा याच्यावर मीटवर.
ठीक आहे, पण तुझ्याकडे बुक असेल ना?
आहे, मी बुक मधनच बघते, पण ते तुम्ही काही एक्झाम्पल वगैरे
पण
दिले ना तर
गुगल
ते लवकर लक्षात
मीटवर
येतं.
ना हे काय झालं काय माहीत. एक मिनिट, हँग झाली वाटतं. वर खाली नाही जाते, मी करते तर नाही जाते ती.
नाही आहे ना.
ठीक आहे.
हा बरं, जाऊ दे ना.
गुगल मीटवर काही इश्यूज आहेत, टीम्सवर काही इश्यूज आहेत आपल्याला. ठीक आहे, वी विल मूव ऑर्डर. बँकिंग डेफिनेशन, फंक्शन्स अँड युटिलिटी प्रिन्सिपल्स.
प्रिन्सिपल.
पण जे मी बोर्डवर प्रोजेक्टरवर दिसतंय ते तर होतंय. प्रोजेक्टरवर होतंय.
हा, असू द्या मॅम.
Now we were having meaning of banking. What we saw, Shela, when we have a commercial bank takes savings which is deposited by the people with the bank, and now the commercial bank will use this savings or the reserve to create credit in the economy. It will use these savings to give loans to businessmen and individuals who require loan, right? So that is the banking system. Sears define bank as an institution whose debt, bank deposits, are acceptable in settlement of other people's debts. According to Crowther, a bank collects money from those who have it to spare or who are saving out their income and lend it to those who require it. Right? We as an individual earn some money, we have some expenses. Out of those expenses, we save some money, and out of this savings go in our commercial bank. Now the commercial bank uses this savings of the general public to give loans to businessmen and individuals who require loan, right? So that is the banking system. What are the essentials of banking system? Adequate liquidity. What does adequate liquidity mean? Suppose if the bank has 1000 crore rupees as savings available from the general public as reserves with it. So it should not give this 1000 crore rupees whole amount to the businessman or individuals as loan. It should keep some liquid amount with it. Because why? Because if we as a person who have deposited that money with the bank, any time face any emergency or any need, what we will do, we will go to the bank and ask the bank for some part of that money or the whole money, right? So if the bank gives the whole amount of money which is reserve or savings with it to the businessmen or individuals who require loan, how will he meet the problem when individuals who have account ask for that money? So it has to maintain some liquidity, right? It has to keep some liquid money with itself to determine, suppose if the saving or the account holder comes and in case of any emergency wants to withdraw the money, I can pay him the required money. That is known as adequate liquidity. A bank must keep sufficient cash in hand to meet the claim of depositors. It should not hold money which it has in the form of reserves or savings. It should not give that whole money as loan. It should keep some cash balance with itself, so that when individuals who have accounts in case of any emergency or any requirement of money come and ask for them for their money, the bank can give them money. Otherwise, they would be insolvent. A bank's failure not only affects the depositors but the bank also. People would not keep more funds with the banker unless it ensures safety to its customers. Next is expansion of banking. Banking facilities should spread throughout the economy. What they are saying is that bank as a institution or financial institution should provide its banking facilities in different areas, in rural as well as urban areas. It should not be just that the banking facilities are available in urban areas, and even though people from rural area have an account with the bank, they don't have the proper banking facilities like ATM available there or any other banking facility, or there is no much branch available of there so that they can deposit their money. So the bank should take care that it should provide its facilities to rural as well as urban areas. Banking facilities should spread throughout the economy. It must cover all the sections of the people need in funds and all productive activities. The less developed regions, which are the less developed regions like rural regions, should get more banking facilities than others. Thus, diffusion of banking offices is essential. Investment and loan policies. What they are saying in terms of investment and loan policies? Loan, while giving a loan, what should the bank do? Shreya, have you applied for loan anytime?
No, ma'am.
Okay. So, what precautions the bank should take while giving loan? See, firstly, while giving loan, the bank should check the credit worthiness of the person whom they are giving the loan, right? His CIBIL score. What does that mean? They should check that does this person have sufficient income to pay back the loan? Has this person in the past taken some loan and not paid that loan? If he has a history of he has a history where he has taken a loan and not paid it, in future also he will take the loan and he will not pay. So they will check his past history of the loan. They will check his income. They will check whether he is employed or not. They will check how many years of service he has. Other things, in sometimes the bank asks for collateral also. Like the bank should be cautious about these things. They should ask for collateral. Why? Because if the person does not pay us back the loan, we can sell that collateral and recover the loan amount with the interest. So bank should be cautious while giving loan, right? If it gives loan to a wrong person who does not have the proper income to pay back the loan, he will not pay that loan to the bank, and that loan will be a bad debt to the bank, right? So that is the case. Bank should take proper precautions while giving loans. So it should check whether that person has proper income, whether the person is employed, whether he has more years of service so that he can pay back that loan. He has a good CIBIL score. He has providing a collateral. Can he provide a collateral to us? So all these factors should be taken into consideration before giving loan. Otherwise, the bank will give a loan to a wrong person. That person will not pay back the bank the loan amount, and that will create a bad debt to the bank, and bank will be in loss, right? Loan policies and investment. A sound banking system must have a sound investment policy whereby it can optimize the twin goals of liquidity and profitability. If loan and investments are long, bank suffers losses or faces liquidity shortage. A prudent banker should carefully determine the composition and the character of its loans and advances so as to optimize earning without endangering safety and solvency. Human factor. What they are saying? The soundness of a bank depends much on the quality of the banker. Banking being a practical affair, rigid application of bank laws are not always fruitful. Much depends on the discretion of men piloting the ship. Sound banking thus depends on the banking personnel. Again, it's banking personnel than the banking laws. So they are saying the management which is there in the bank, mostly that depends on the management of the bank, how the bank will grow in future, how will it operate, whether it will be profitable or not. So the staff or the management of the bank should be good enough for the growth of that bank. Now we will see what are the functions of commercial bank. Modern commercial banks perform a variety of functions and provide number of services to their customers. They are regarded as departmental store banks because they provide a wide variety of services to their customers. Just a minute. YouTube कुठे गेलं? अरे ओके अरे यार शिट जस्ट अ मिनट Now we will see various functions performed by commercial bank. Commercial banks play a very prominent role in the financial system of an economy. They perform a variety of functions as discussed below. Acceptance of deposits. One of the primary functions of commercial bank is to accept deposits from the general public, right? We as individuals earn some money, right? And out of that income we have some expenses and we save some money. So this saved money is provided to the commercial bank in the form of deposits by the individuals, right? Now we have current deposits, saving deposit, term deposit and recurring deposit. We will see the differences between these. So current deposits are the deposits which are given in a current account. Do you know the difference between current account and a savings account? See, in bank we have two types of accounts. Current account and a savings account. So, in a current account, when we deposit some money, there are some restrictions, and for saving account, there are certain benefits. So, usually, saving account gets some interest. While this current account, we do not get any interest on the deposits with current account. Second difference is that in a current account, we do not have the restriction that we can withdraw any number of times. For a saving account, there are certain restrictions that you can withdraw in a month, suppose 5 times, 6 times. But to a current account, there are no restrictions on the withdrawal. You can withdraw any number of times. So this is the differences. So what are current deposits? The deposits which are current account are mostly used by the businessmen, because that is they can require cash at any time, right? And in large number of times they require cash. So mostly current accounts are used by businessmen.
and savings account are used by salaried people. So what they are saying, whatever the deposits which are done by the people in this current account by the businessmen are acceptance of deposits by bank, right? These are the deposits made into current account of bank. They are most convenient. See, they are saying current accounts are most convenient to businessmen, public authorities and joint stock companies because there are no restrictions on the number and the amount of withdrawal. So in current account, there are no restrictions on the number of times you can withdraw and the amount which you can withdraw. But a saving account will have these restrictions. But another difference is that saving account deposits we get certain interest, but current account we don't get any interest. So now is saving deposits. These deposits are made into a saving account of the bank. They are most convenient to salaried employees, artisans and people belonging to low and middle class groups. They also get interest. The rate of interest varies from The rate of interest is comparatively low and is around 4% per annum on the saving deposits. Now we have term deposits. What are term deposits? See, there are, we save certain money and we give to the bank and we do a FD, that is a fixed deposit. So that fixed deposit is also a deposit accepted by the commercial bank, right? So that term deposit will have a higher rate of interest compared to a saving account because we are providing the money to the bank for a particular duration because it has certain time duration for which we will keep that money with the bank. We will not withdraw it immediately. So the duration is more, so the interest rate is high for fixed deposits or term deposits. They are also called fixed deposits because the money is deposited with the bank for a fixed period. Since it is for a fixed period, the interest rate is high compared to the savings bank account deposits. The deposit can be withdrawn after the expiry of the maturity period. See, 1 year after I am doing an FD for 1 year. So after 1 year, I can go and withdraw that, withdraw my amount from the bank of that FD. The minimum period of deposit is 15 days. The rate of interest varies from 6% per annum to 12% per annum. This is more than the rate of interest for saving bank deposit rate, which was nearly 4%. Now the rate of interest is from 6 to 12%, which will vary according to the duration. If the duration is more, the rate of interest will be more. And if the duration is less for the term deposit, the rate of interest will be less. Now we have recurring or cumulative deposits. Shaila, do you know about recurring deposits? Hello?
No, ma'am. No, ma'am.
See, if we have 1 year, what do we do? In a post office, I go and every month I deposit 500 rupees. Every month I am depositing 500 rupees for 5 years. So that is a recurring deposit. Recurring deposit means what? We are doing it on a recurring basis, on a continuous basis. A fixed amount we are saving from the month and we are depositing it with a bank or a post office, and in turn we will get some interest on that amount. So what is recurring deposits are doing? They are helping people to save money. Right? Every month a fixed amount they are deciding according to their income or according to their needs. They are deciding a fixed amount. Say suppose 500 rupees I am depositing every month in a post office or a bank, and for a duration of 3 or 5 years. So that is known as recurring deposit. Hello?
For a long time, na ma'am?
Yeah, it can be for 1 year, it can be for 5 years according to your duration, according to the period which you can deposit that amount. But
Yes.
in case of FDs, what it was, were we depositing small bits of amounts every month? No, we are depositing
No.
a large amount once with the bank for a specific duration, right?
Yes, ma'am.
So recurring deposits are helping people to save money monthly, right? They are helping people to save their money, right? Recurringly means every month they are doing it. Okay. Recurring or cumulative deposits. These are the variants of fixed deposit. These deposits are very convenient who cannot save huge amounts at a time. See, they are saying if people cannot save, some people cannot save huge amount at a time. So what they do? Every month they save specific amount, they deposit in a bank. Next month also they save that specific amount, deposit in a bank. So they are helping to inculcate the habit of saving among the people, right? These deposits carry interest at a rate more than the savings bank and less than the term deposit. So the interest rate is very low for the saving bank account, highest for the fixed deposit, and for recurring it will be between the saving bank and the fixed deposits. Okay. Payment of loans and advances. Another primary function of the commercial bank is to give loans and advances to different sections of the society like traders, industrialists, farmers and artisans. We will take a break, Sheila. Is it required?
Yes, ma'am.
Okay, we will take 2-3 minutes break.
हम कंटिन्यू करत असाल तरी चालेल.
काय काय? काय म्हटलीस?
कंटिन्यू केलं तरी चालेल.
घेऊया 2 मिनिट ब्रेक घेऊया 2 मिनिट.
हा बाकीच्या मुलांना विचारा, मला काही प्रॉब्लेम नाही.
नाही 2-3 मिनिट घेऊयात ब्रेक आपण मग करूयात कंटिन्यू. चालेल.
चालेल चालेल मॅडम.
Hello Sheila, we'll continue now.
Now we are with demand loans or call loans. The primary function of the central bank is to give loans, commercial bank is to give loans to the general public. There are demand loans or call loans. What is a demand loan or call loan? Demand loan is a loan that should be repaid on demand by the bank. Demand loan, what is demand loan? Demand loan means, the word demand only suggests us that it is a loan which we have to pay to the bank when demanded by the bank. Like, it does not have a specific duration. See, if I take a loan for a duration of 10 years, I know after 10 years I have to pay back that loan. But in case of demand loan or Harshad Mistry, in case of demand loan, we have to pay it to the bank on demand. So that's why we have demand loans or call loans. Demand loan is a loan that should be repaid on demand by the bank. It does not have specific maturity period. So like other loans, we have a specific maturity period, 10 years, 15 years, 20 years. It will not have a specific maturity period. The loan is kind of advance made with or without security. Like the money is given by the bank without taking a security, or it can be also by taking a security. Security means what? Collateral. Like we are giving some gold as a collateral, we are keeping our house as a collateral, we can keep our land as a collateral to the bank, so that if we don't pay the loan back, the bank will take that collateral, that is our gold or our land or our house, and use it for the purpose of loan payment. These are called call loans. Normally, call loans are given to other banks or financial institutions for a day or few days. See, when there is urgent requirement of loan, urgent requirement of money by these financial institutions or public authorities, they take demand loan. They instantly take that loan and pay it off within a day, within say 2-3 days. So they take it and they pay it off within 1 or 2 days. So the duration is very short. And there is lot of urgency required, so they take demand loans. And they know that within 1 day, whatever they will do out of it, and they will be able to repay it back. Next are short-term loans. The duration for these loans is short, so they are said as short-term loans. These loans are given for a specific short period. They are sanctioned to businessmen and farmers. To finance working capital. Working capital means what? To run the day-to-day operations of the business, the businessman requires some loan. Why? See, suppose if I have taken some goods, purchased some raw material. I have purchased some raw material and I produce the output, and there is time for me to sell the output from the market and get the amount from the debtor. The debtor has not paid me the amount, that is the customer has not yet paid me the amount, but I want to pay my creditor, that is the person from whom I have purchased the raw material. So in that case, my debtor has not paid me the amount of goods which I have sold to him. How will I pay to the creditor? In that case, I will take a short-term loan to meet my working capital requirements, my operational needs. I will take that loan, I will pay the creditor, and when the debtor will pay me the amount, I will pay back my short-term loan. Clear? Individuals may also receive such loans as personal loans. They are given against security. Now we have cash credit. Cash credit means what? See, if you have an account and you have balance of 10,000 in that account, you can get a credit or loan from that account up to rupees 20,000. So you can have an overdraft facility. You can borrow more than the balance that you have in your account with the help of overdraft facility. That is cash credit. Cash credit refers to arrangement by which bank allows its customers to borrow money up to a specified limit from an account opened for the purpose. The customers need not withdraw the entire amount in one installment. Next is overdraft. Overdraft facility is allowed only to current account holders and not to saving bank account holders. So overdraft facility is only available to current account holders. So what is this? They are allowed to withdraw a money more than their balance that they have in their account. That is known as overdraft. And in excess of the money which is taken from their balance, see, suppose if their balance was 10,000 in a current account and the person opts for the overdraft facility. So he has a limit, he can borrow 20,000 rupees with the overdraft. So what we will do? He will borrow 20,000 rupees with the overdraft facility, and what the bank will do? Bank, on the excess amount that he has borrowed, 10,000 was his balance. He borrowed excess 10,000. So only on that 10,000 which is borrowed excess, the bank will charge interest. Okay? So that is overdraft. This facility is allowed by the bank to current account holders. It's very important to note that overdraft facility is allowed by the bank only to current account holders and not to saving bank account holders. They are allowed to withdraw money with or without security in excess of the balance available in their account up to a limit. Only up to a limit. If it is not that if you have 10,000 in your balance in your bank account and you can borrow 1 crore rupees. No, there is certain limit. If your balance is 10,000, depending on that limit, there is a range, and up to that range you can borrow. And on the excess amount from their balance and the amount you have borrowed, the excess part the bank will charge interest. Discounting bills of exchange. What is discounting bills of exchange? We will see. See, suppose there is a buyer and there is a seller of goods. Buyer of goods, seller of goods. Seller sells the goods to the buyer. Hello? The seller sells the goods to the buyer. So now the buyer does not have money available with him. So what the buyer will do? Buyer of that amount, see, if he has to pay the seller 20,000 rupees, he will issue a bill of exchange to the seller of 20,000 rupees. A document stating that he is going to pay the seller 20,000 rupees. So, because the buyer does not have money at that time, so what does he do? He issues a bill of exchange. So now the seller can go to the bank and get this money of this bill of exchange. He can go to the bank, show the bank this bill of exchange, and the bank will discount this bill of exchange, that it will take some margin of itself, gain some bit commission or something of that sort, and it will pay that 20,000 out of 20,000. See, suppose 1% is the bank's commission. 200 rupees. So 20,200 rupees, 19,800 rupees the bank paid to the seller. Now from whom the bank will recover the other 20,000 rupees? From the buyer. Now again the bank will go to the buyer and recover this 20,000 rupees from the buyer. The buyer will pay to the bank the 20,000 rupees. That is bills of exchange.
So it is used in helpful in credit transactions. Discounting of bills of exchange. Bills of exchange are undertakings written by the buyer and given to the seller when the transaction is made on credit basis. The buyer undertakes to make the payment after a specified duration. See, what he says that I will pay you this much 20,000 rupees after 3 months. He states that. The traders who possess such bill of exchange, what will the seller do? He will go to the bank. If he immediately wants money, he will go to the bank, discount the bill of exchange, get the money from the bank after deduction of some commission of the bank, and he will get that money. Now what the bank will do? Bank will go to the buyer after 3 months and recover that 20,000 rupees from the buyer. The traders who possess such bill of exchange with them may approach the bank for discounting the bill of exchange when they need money. Next is credit cards. Everyone knows about credit card. What is credit card? Credit card refers to purchasing goods on credit. See, I want to make a purchase of 1 lakh rupees, and in my account I only have 10,000 rupees. So, if I use my credit card, even though my balance in the account is only 10,000 rupees, I can use my credit card and make that purchase of 1 lakh rupees. That is, a transaction is made on credit. That means that I don't have that money. I am taking that credit of money from the bank. I am taking that excess 90,000 rupees from the bank as a loan and then purchasing that transaction. So what is the policy of credit card? You have to pay that amount, excess 90,000 you took, right? 10,000 you had in your balance and 1 lakh goods you purchased. So 90,000 was on credit card. So that 90,000 you have to pay within a specific duration. If we do not pay that amount within a specific duration, then there will be a interest which will be very high, which will be charged on that 90,000 rupees. So credit card interest rates are very high compared to other type of borrowings. Nowadays, the banks have devised new methods of giving loans to customers. One such popular method is issuance of credit card. A credit card holder can use his card to purchase goods on credit from specified firms and shops, also withdraw cash subject to certain regulations. Now we can see how they create credit. Creation of credit. Commercial banks create credit. This is a unique function of commercial banks. How do the credit is created? See, previously we saw, we were discussing, people earn some money monthly, they have certain expenses, out of that expenses they save certain money. This certain money which is saved is either in the commercial bank's saving account or as a term deposit, FD with the bank. So this money which is available with the commercial bank in the form of savings from the general public is used by the commercial bank to create credit. To create credit means what? To give loans, to give short-term loans, to give long-term loans, to give credit card, anything on credit or loans which can be given by the commercial bank can only be given when it has this savings from the general public, right? Credit is created out of the primary deposits of money the customer received from the public. Part of the total amount of these deposits is given as loans and advances to customers. What we saw, all the amount which the commercial bank gets in the form of deposits, all the amount the commercial bank will not give in the form of credit or loans. It will keep some amount. Why? Because if the person who has deposited that money requires the money in case of emergency or any need, it should be able to give it back to that person. If it gives the whole amount which it has as savings to the general public, the depositor, how we will provide that money if the deposit requires that money in case of emergency or need? So the all amount which is deposited is not given as loan by the commercial bank. Part of it is given as loans. It should be noted that one single bank cannot create credit. Banking system as a whole consisting of several banks jointly create credit. Next is agency functions. What are the agency functions performed by the commercial? Just a minute. There are other functions also the commercial bank performs, like check disbursement are there, or other functions like if there is an different functions are there. It can provide transfer money from one bank account to another bank account if we request them. It can provide other functions like ATM machine functions, ATM card functions. So there are a lot of functions which the central bank is performing in as a agency functions. See, commercial banks perform certain agency functions also, like collection of check, drafts, bill of exchange of their customer from other banks, collection of dividend and interest from business and industrial firms, purchase and sale of securities, shares, debentures, government securities on behalf of their customers, acting as trustees and keeping their funds in safe custody, acting as executors and executing the will of customers after their death, making payments such as see, if we have a particular insurance premium every month, see, if we are paying 600 rupees yearly as an insurance premium to the LIC, and if we go to the bank and tell that every year you can debit my account with 600 rupees, we give the consent that every year my account should be debited with 600 rupees as insurance premium to be paid to LIC. So bank will accept that consent and it will debit that amount. Insurance premium, income tax, subscription on behalf of their customers as per their advice. Only if we give that consent or advice to the bank, then only the bank will do. Otherwise the bank will not do that. General utility functions. What other general utility functions? We have locker also available, right? We can keep our valuables like gold, anything which is more valuable with us in the locker. So locker function also the bank provides us, which is a very important function nowadays, right? Now what can be another function? Internet banking is another function. NEFT is provided. Internet banking facility is being provided. If we ask the bank to transfer money from our account to another person's account, that also is done by the bank, right? So the bank is performing lot of functions. Besides the above agency functions, the commercial banks provide certain general utility services to their customers. Provider of locker facility for the safe custody of silver, gold ornaments, important and valuable documents. Transfer money of the customers from one bank to the other by way of demand drafts, mail transfer. DD, we do a demand draft. In that case, what we do? We ask the bank to transfer that money from our account to another bank, another person's account in a different bank or the same bank. So that function also the bank performs. With the use of computer and internet facilities, nowadays the banks are facilitating online transfer of money from one bank to another, right? Internet banking we can do. We can transfer money from one bank account to another bank account. Issue letters of credit to enable the customer to purchase commodities on the basis of credit. Letter of credit is used to purchase commodities on credit. These letter of credit are also a function of the commercial bank. Endorse and provide guarantee to the shares issued by the joint stock companies and help them in raising capital. So what is guarantee to the shares? See, suppose if a company wants to issue shares in the market, company is issuing shares in the market. It is issuing 10,000 shares. So the company is not sure that the general public will purchase all these 10,000 shares. Company is not sure whether everyone will purchase this 10,000 shares. So what it does, in that case, the bank helps the company in providing a guarantee. What the bank says, if suppose out of this 10,000, whatever the shares are purchased by the general public in the IPO, that is initial public offering, the remaining shares we will purchase. We take that guarantee. That is the guarantee of the bank. And that the bank is helping the company to raise capital. See, if the general public only takes 6,000 shares, the company is not able to raise the required capital of 10,000 shares which it had decided. So in that case, the bank is providing the guarantee and taking the 4,000, purchasing that 4,000 shares and helping the company to raise the capital. Right? Next is, travelers' checks are issued by the commercial bank to avoid the risk of carrying cash. Normal check, why we use checks? We should not have the problem of carrying this huge cash. In the middle, if someone or cash gets lost, there is a theft from us. That's why we are using check. So this function of check is also helping us to transfer money by the help of commercial banks, right, as a medium. Provide foreign exchange to customers for exports and imports in connection with their business. See, if I want some foreign currency, what I can do, I can go to a bank and take that foreign exchange. Why will I require foreign currency? In case of import and export, I will require foreign currency, right? If I import certain commodities, I will have to pay in terms of foreign currency to the purchaser from whom I have purchased. I cannot pay in Indian rupees. So in that case, I will approach my bank. If I want to pay in dollars, I will give that amount to the bank and take that dollars and then pay my purchaser. If I export goods, the foreign person will pay me in that foreign currency. He will pay me in dollars. But I cannot use dollars in India to pay for my other things, right? So other wages, rent. So what I will do, when I get that foreign currency, when I export goods from the person, then I will give that foreign currency to the bank and get it converted into Indian rupee and then use that Indian rupee for my purpose. Clear? Providing foreign currency to customers for exports and imports in connection with their business. Convey information on behalf of their customers to the businessmen operating in other places and also collect information of such businessmen and provide to the customers. Another function is ATM. ATM is a very useful function provided by the commercial banks. We can any time go and withdraw the money, right? Recently, commercial banks have been establishing ATMs, automated teller machines at different locations so as to enable their customers to withdraw cash from their accounts any time of the day. See, bank has a particular duration or time. Sometimes there are holidays also. The bank has a holiday also. It also has a specific particular time. During that particular time, if we don't have time, what we will do? We will use ATM. We will go to the ATM and withdraw. If there is a bank holiday, what we can do if we require funds or cash, we will go to the ATM and withdraw. So ATM is a very important facility which is being provided by the commercial bank to us. Principles of commercial bank. Principle of liquidity. Deposits are repayable on demand or after the expiry of certain period. Everyday depositors either deposit or withdraw cash. To meet the demand for cash, all commercial banks have to keep certain amount of cash in their custody. Simple, the same thing which we saw previously. If the person, if people deposit certain 1000 crore rupees are there as deposits available with the commercial bank, the commercial bank will not use that complete 1000 crore rupees to give loans to the general public, short-term loans or long-term loans. It will use a part of it. Why? Because when the depositors require that money in emergency, or if they are in need of money, the commercial bank should have some money to give them at that time. So a part of the deposits is used to give as loans. So it has to maintain certain liquidity. Principle of profitability. Any commercial bank will be its primary motive? To earn profits, either in the form of commissions, in the form of interest, right? So that is its main motive. Principle of profitability. The driving force of commercial enterprise is to generate profit. So it is true in case of commercial bank also. Principle of solvency. Commercial banks should be financially sound to maintain the required capital for running the business. They should be solvent, right, to run their business. Principle of safety. While investing the fund, the banks are to be cautious because bank's money is the depositor's money. It is very important, right? Because the bank is not having its own money to make anywhere investment. So it should make secure investments because it's the depositor's money. It has to pay back the depositor. And if it can't pay back the depositor, it will lose the trust of the depositor. And once the trust is gone, the bank is completely, no one will keep trust on bank. There will be no trust on that bank, and in turn people will not deposit their money with the bank. If people don't deposit, the bank will not be able to give much loan credit. If bank is not able to give much credit, it will not get much profits. Its profitability will be low. So while investing any money, the bank should take care that the investments are secure because the money is of the depositors. Principle of collection of savings. This is very important principle of today's banking business. Commercial banks always seek huge amount of idle money from the clients. Nowadays, banks fix up the target for their employees to generate more savings from the people. Principle of loan and investment policy. The main earning sources of commercial bank are lending and investing money to viable projects. So commercial bank always try to earn profit through sound. What are the main income sources of the commercial bank? The interest rate that it gets on the long-term loans or short-term loans, which it is providing to the general public, that is the main its income source, right? And the investments that they are making, investments which the commercial banks make, and the interest that they get or the return that they get on that investment, those are its income sources, right? Now we will have principle of economy. Commercial banks never go for any unnecessary expenditure. They always try to maintain their function with economy that increase their yearly profit. They don't incur unnecessary expenses, and it is a very good thing. They should not incur unnecessary expenses. If they incur unnecessary expenses, what will happen? Their profitability will be low. Principle of providing service. A better service brings great reputation to the bank. See, bank's reputation will be on what? On the service provided by the bank. If the bank provides a good service to its customers, customers will be happy and they will do mouth publicity. And that reputation which will be gained by the bank will help them to bring more customers, and the customer base will increase, and that will lead to more profitability. Principle of secrecy, right? This is very, you might be knowing. If I go to a bank and say to the bank that, tell me Shaila Kole's bank account, how much balance it has, will the banker tell me how much Shaila Kole has as available balance on her bank account, Shaila?
No, ma'am.
That is the principle of confidentiality. If they will not tell, they even to the person, only the account holder can get, only Shaila can know her available balance and whatever things related to her account. If I go and tell the person in a bank that I want to know Shaila's bank balance, they will not tell me. They will also not provide me other details about Shaila.
No.
So that is the confidentiality of information and principle of secrecy. Commercial banks maintain and keep the client's account secretly. Nobody except the legitimate person is able to see the accounts of the clients. Right. Then we have principle of modernization. Modernization means what? The available technology which is improving. The bank should provide for facilities like internet banking, debit card, ATM, credit card. These facilities are the modern facilities which every bank is providing. So the bank should provide these facilities to its customers. It is the age of science and technology. So to cope up with the advanced world, the commercial bank has to adopt modern technical services like online banking and credit card, etc. Principle of location. Commercial banks choose a suitable site where the availability of customers is large, right? They should choose a suitable site where the availability of customers is large. Principle of relation. See, if we as a bank, we should maintain good relations with our customers. Even in business also, we need to maintain good relations with our creditors and with our debtors. If we are not having good relations, then we will not be able to do business in a proper way and it will not lead to profitability. So it is required for the bank to maintain good relations with its customers. Commercial banks always try to maintain good relation with their client and potential customers. Principle of publicity. It is the age of publicity. If you would like to earn money, you have to give more advertisement through various media. In that case, commercial banks follow this kind of principles to increase their customer base. So to increase their customer base, it is required that the bank should have publicity. To do this publicity, various advertisements are provided, like by Kotak Mahindra Bank, HDFC Bank. They provide various advertisements, right? We have this credit card facility, we have this personal loan at very cheap rate compared to other banks. We provide fixed deposit with high interest rate compared to other banks. To show their unique features, what they are providing compared to other banks. So with help of this publicity, they will gain a reputation and their customer base will increase and their profit will increase. Now we will see what is bank rate policy. Shall I clear up till now? Hello?
येस मॅम.
No doubts, right?
येस मॅम.
Okay.
हे मीटवरच जॉईन करायचं मॅडम, कारण की मीटवर आहे ना, 2-3 वेळेस सागर सरांनी ते घेतलं ना, तर मीटवर व्यवस्थित होतं, म्हणजे ऐकायला येतं, काही डिस्टर्ब वगैरे आवाज पण नाही जात.
काय म्हटलीस, मला कळालं नाही शैला. व्हॉट डिड यू से?
म्हटलं हे आता गुगल मीटवर जे तुम्ही आज लेक्चर घेतलं ना,
आता आज जे झालं त्याच्यामध्ये म्हणते का तू?
नाही हे गुगल मीटवर जे तुम्ही आता लेक्चर घेताय ना, असं गुगल मीटवरच घेत जा म्हटलं.
बरं ठीक आहे, चालेल. ओके, बघूयात आपण. चालेल,
हो हो.
ठीक आहे. Bank rate policy. As a banker's bank, central bank lends money or rediscounts the bill of commercial bank. You know the difference between the central bank and commercial bank? Central bank is only one bank in India, which is the Reserve Bank of India. There are a lot of commercial banks in India, right? State Bank, HDFC, Kotak, these all are commercial banks. Whereas central bank is only one bank, which is the Reserve Bank of India. So what happens? As a banker's bank, central bank lends money or rediscounts bills of exchange to commercial bank. See, what will happen? I am a commercial bank. I don't have the money to pay to my depositor. When depositors deposit money with me and I give loan to businessmen and individuals who require loan. So what happened? I gave loan and there was a problem. Even though I gave some part of the deposits as loan, I had some liquidity. The depositor came and asked me with the whole amount he had deposited. So now I need to give the amount to the depositor, but I don't have the complete amount with me. So what will I do? In that case, I will approach the central bank to borrow money from the central bank. In this case, the central bank, in case of India, which is the Reserve Bank of India, helps the commercial banks. So what do the commercial banks do? The commercial banks take loan from the central bank and then give that loan to the depositor. That's what they are saying. The rate of interest charged by the central bank is known as the bank rate or discount rate. Now the commercial bank is taking a loan from the central bank to pay to the depositor. The commercial bank has to pay some interest rate to the central bank, that is the Reserve Bank of India. That rate of interest is called as the bank rate or the discount rate. Next is what? By manipulating the bank rate, central bank can regulate the credit creating power of the member banks. Now the central bank will decide how much rate of interest, how much bank rate or the discount rate it should charge from the commercial banks. That rate of interest will help in deciding the credit in the economy. Next is what? If the bank rate is raised by the central bank, commercial banks have to borrow at a higher cost. Naturally, if as a commercial bank, I take a loan from the central bank or the Reserve Bank of India, and the Reserve Bank of India increases the bank rate or the discount rate, what will happen? My cost will increase. I have to pay higher rate of interest on that loan, right? My cost of the commercial bank will increase. Then they will increase their lending rate. My cost increase. So naturally, what I will do? I will increase my interest rate also from the persons whom I have given the loan, from the businessmen or investors who had taken the loan from me. I will increase the interest rate for them also, because I have to pay a higher interest rate, my profit will reduce. So I have to increase my interest rate also. So I increase my interest rate for the loans which I am giving to the businessmen or individuals. Then they will increase their lending rate. This rate is known as the market rate. See, the rate charged by the central bank or the Reserve Bank of India is known as the bank rate or the discount rate. And the rate which the commercial bank charges to the person whom they are providing the loan, which is the businessmen or individuals who require loan, that rate is known as market rate. The difference between the market rate and the bank rate is the profit of the commercial bank rate. If the commercial bank takes loan from the central bank at 7% interest and gives that amount as loan to the businessmen or individuals at 12% interest, the difference of 5% is the profit of the commercial bank rate, the benefit of the commercial bank. The difference between the market rate and bank rate is the profit margin of commercial bank. When bank rate rises, market rate also rises and vice versa, right? So, if the central bank increases its lending rate, which is known as the bank rate, commercial bank will also increase its rate, which is known as the market rate. And if the commercial bank increases its market rate, central bank or the Reserve Bank of India will also increase its rate. On the other hand, what they are saying? Demand for bank loan will reduce. Naturally, when the interest rate is high, what will happen, Sheila? If the interest rate is high, will you take loan or not?
Not, ma'am.
Most of the people will not take the loan. There will be only very few people who will take the loan. So, the loan demand will decrease when the interest rate is high.
Hi.
On the other hand, for credit expansion, bank rate is reduced. What they are saying? Bank rate is what rate? Bank rate is the rate which the central bank is charging the commercial banks. Right, Sheila? Bank rate
Yes,
is the
ma'am.
rate which the central bank is charging the commercial bank. So, if it wants to expand the credit, what it will do? Expand credit means what? It wants to give more money to the people it wants to give more money in people's hand. So for that purpose it will reduce the interest rate. So if the interest rate is reduced, more people will go and take the loan.
Loan. Yes, ma'am.
There will be more money in the economy, more money in people's hand, and the
People's
credit will expand. The effectiveness of this technique depends on the extent to which commercial bank depends on central bank for loan and rediscounting. So how much the commercial bank depends on the central bank, that much is the effectiveness of this technique. If the commercial bank depends more on the central bank, this technique will be more effective. If the commercial bank does not depend on the central bank, this technique will be less effective. If the banks can collect funds from other sources, like rather than just from the central bank, if the bank does not depend on the central bank, it has other sources to take loan, then the technique will be less effective. At relatively cheaper rate, they do not depend on central bank credit. Logically, right? If the central bank is charging me 7% interest rate and I am getting a loan from other source, from another bank, say suppose at an 6% interest rate, I will prefer that because the interest rate is less. Wait. Again, if the investment opportunities are not present, the market demand for credit will be weak. A fall in the bank rate may not rise the level of bank credit. Move further now. Commercial banks and central bank. What is which is the central bank in India, Sheila?
Yes, ma'am.
What is the name of the central bank in India?
Reserve Bank of India.
Yes, yes. So we will see how these commercial banks and central banks operate now in the next part. So what they are saying, a commercial bank is a financial intermediary. It accepts deposits from the surplus units and lends financial resources to the deficit units. Same what we saw before. It will accept deposit from the people who have more money in the form of savings, and it will give that money in the form of loans to people, businessmen or individuals who require loan. Central bank is the apex of the banking system in any country. It is the supreme authority of any banking system. In India, we have Reserve Bank of India. It controls, regulates and supervises the activities of the bank and the country's banking system. So the Reserve Bank of India in bank will control all the commercial banks in India, their activities, so that there is no problem in the economy. The economy is banking system is performing or working efficiently. So that is the role of the central bank, to supervise their activities, to help them and to control them. In our country, the central bank was established in 1935 under private management. It was nationalized by the government in 1949 and named as Reserve Bank of India. What are the objectives of the central bank? What will be the objectives of the Reserve Bank of India?
India.
To maintain the internal value of the currency. Internal value means what? The value that how much goods and services can be produced from that commodity, that currency is the internal value of that currency. So that commodity should have the proper value so that large number of goods and services can be purchased. To preserve the external value of currency. External value means what? If the rupee is falling continuously in terms of dollar, our external value of our currency rupee is deteriorating or decreasing, right Sheila? So we should stabilize that value of our rupee in terms of dollar. So
Don't
that is
understand,
the,
ma'am.
hello?
Don't understand, ma'am, internal value and external value. Please explain again.
See, external value means what? In terms of foreign currency. See, sometimes you might be hearing rupee is falling continuously in
Yes,
terms
ma'am.
of dollar. Means the value of rupee is decreasing in terms of dollar.
What?
Yes.
Yes, ma'am.
So that is what our value in terms of foreign currency, that is external value, is decreasing, right?
Yes, ma'am.
So in that case, the Reserve Bank will come forward and try to stabilize the value of our currency rupee in terms of dollar. That is the external value.
External.
Yes.
And internal value, ma'am.
Internal value means in relation to the domestic, right? Means what? With that 1,000 rupee, how many goods or services within the domestic economy I can purchase? If I can purchase more goods and services within the of the domestic economy with that currency or that amount, my value is more, right? If I can purchase less goods and services with that 1,000 rupee note, my value is less. Domestic value, that is the internal value. Within India, my value of rupee will be less. But if I am able to purchase with that 1,000 rupees more goods and services, my value is more. So that is internal value, which is the domestic value in relation to the domesticness.
Yes, ma'am.
To ensure price stability. See, also the Reserve Bank of India has the function to ensure that price stability means what? There should be, inflation should not be there in the economy. Price must be stabilized. So in case of inflation, the Reserve Bank of India comes into picture, right? What it does when there is inflation, it will reduce the interest rate or increase the interest rate.
What, ma'am?
In case of inflation, the Reserve Bank will try to stabilize the price, right? So for
Yes.
that purpose, it will increase the interest rate or decrease the interest rate.
डिक्रीज.
See, when there is inflation, common logic is what? More demand is there, means more purchasing power, people have more money. Now we want to reduce this money, so we will increase the interest rate.
Increase.
हाँ.
Yes, ma'am. Increase.
So simply you have to go in a, not to confuse yourself. Simply inflation is more means what? Demand is more. People have more purchasing power,
More
people have more money. Now
More
what to
money.
do to control it? To reduce the money from the people's hand. To reduce the money, we have to increase the interest rate. So
Increase
people
the
will
rate,
not
right.
borrow more money. And if people don't borrow more money, their money supply in the economy will get reduced, right?
Reduce. Yes, ma'am.
Think in that way. To promote financial institutions, to promote economic development. See, commercial banks will have, what will be the motive of commercial banks? To gain more profit or profit maximization. But the Reserve Bank does not have this single motive. What motive it has? It has the motive of the economy, of the general public, that the price in the economy should be stabilized, the currency should be good, the value of currency must be good in internal as well as external value must be good, price must be good, there must be economic development. So for the national welfare of the nation, the role of central bank or the Reserve Bank in case of India is very important. But the commercial banks do not have this broader or larger role. Functions of commercial bank. Note issue. Like, see, the central bank or the Reserve Bank of India issues all the notes which we are using, the coins, the currency note, 1000 rupee note, 2000. But which note does the central bank or the Reserve Bank of India does not issue? Only one note. 1 rupee note and 1 rupee coin is not issued by the Reserve Bank of India or the Central Bank of India. It is issued by the Finance Department. All other notes which are in the circulation in the economy are issued by the Reserve Bank of India or the Central Bank. Clear, Shaila?
Yes. Yes, ma'am.
Note issue. The Central Bank alone is authorized to issue the currency notes in a country. It has the monopoly of note issue as no other bank is permitted to do so. Does the commercial bank, can they issue notes? Sheila, can commercial banks issue notes in the economy? Like
No,
Kotak
ma'am.
Mahindra Bank, State Bank of India, HDFC Bank, these are all commercial banks. Can they issue notes?
No, ma'am.
Okay, yes. Only the central bank has this authority. It enables the central bank, but with the help of this issue note, the central bank can control the money supply in the economy, right? With the help of this note issue, right? If there is more money supply in the economy, central bank or the Reserve Bank will not print more notes, right? If there is less money supply in the economy, central bank will print more notes, right?
More notes.
So with the help of this function like printing notes, the central bank is able to control the money supply in the economy, right, Sheila?
Yes, ma'am.
Banker to the government. The central bank acts as a banker, agent and financial advisor to the government in the following ways. So central bank will also help the government in many ways. It is acting as an agent. Advisor means on some situations or some cases, the central bank is advising the government what to do, what not to do, what solution can be taken out. Okay. It maintains the accounts of government funds. If the government has these accounts with the central bank, it maintains the accounts of the government funds. It receives and makes payments on behalf of government. On behalf of government, it can receive the payment, it can make the payment. It gives ways and means advances to the government. It issues new loans on behalf of government. It can issue. Central bank and government are friends, we can say, very good friends. So they are helping one another for the growth or the economic development of the economy. With the help of one another, they are leading to the growth of the economy. It issues new loans on behalf of government. It can issue new loans on behalf of government. It manages the public debt. It undertakes foreign exchange transactions on behalf of government. It acts as an agent of the government in dealing with international financial institutions like IMF and World Bank. IMF is International Monetary Fund, right? And World Bank, you know, the World Bank. There is one bank in the whole world which is known as the World Bank. It advises the government on financial matters. The central bank is advising the government on financial matters. Now we are seeing what is banker's bank. The central bank acts as a banker's bank in the following manner. How it is acting? Every bank maintains a certain minimum of cash reserve with the central bank as a statutory obligation. What they are saying is that all these commercial banks like HDFC Bank, State Bank of India, Kotak Mahindra Bank, these all are commercial banks. What they do, they maintain a certain cash balance with the central bank, that is the Reserve Bank of India. It serves as a lender of last resort. Means what? If the commercial banks want some money as loan, right, for any purpose, if they don't get it from the market, from other sources, they have the last resort, that is the central bank, that is the Reserve Bank of India. They know that the central bank or the Reserve Bank of India will give them that money. If anyone, no one gives them that money. So it is said lender of last resort. This helps the commercial banks to overcome the problem of liquidity and will be able to meet the demand for withdrawals even in times of financial stringency. What we saw, the commercial bank had some deposits with it, and out of that deposits it gives some loans. Only a part of it gives loans. It does not give the whole amount. But even though if it gives a part of it as loans, it has some cash balance and the depositor comes and asks the whole amount and it has a problem. Many depositors come and ask for the amount and it has a financial stringency that it has less cash. What it will do? It will go to the central bank, that is the Reserve Bank of India, to get that amount. So their problem of liquidity is solved with the help of central bank, commercial banks. It acts as a clearing house for commercial banks to settle their interbank accounts. This is possible because all commercial banks have their account with the central bank in which the central bank keeps their cash balance. What they are seeing, all these commercial banks like State Bank of India, HDFC Bank, Kotak Mahindra, all these commercial banks have their accounts with the central bank, that is the Reserve Bank of India. So interbank transactions can be settled by the central bank. Means what? If I want to pay 10 lakh rupees I have to pay to HDFC Bank, and if I have an account with the central bank, what I will say, and I have that balance available in my central bank account, I will ask central bank to say that pay the balance available with you in my account of 10 lakh rupees to HDFC Bank on behalf of interbank settlement. This is possible because why? Every commercial bank is having an account with the central bank. If every commercial bank did not have that account, interbank settlements would not be possible. Lender of last resort, same what we saw. If the commercial banks are facing any requirement of fund and if they do not get that fund available from the market, from any other sources, they know that they will get that loan or that available funds from the central bank or the Reserve Bank of India. So the lender of last resort. The central bank serves as the lender of last resort not only to commercial banks but also to discount houses and other credit institutions. They may approach the central bank when they face problems of liquidity. Controller of credit. This is what we saw. When there is inflation and if there is recession, what does the central bank does when there is inflation? Shaila? Inflation means what? The demand is high in the market. People have more purchasing power.
More
People
money.
have more money. So we should reduce the money in the market.
Market
Huh?
increase the rate of
Interest. Huh? So if we increase the interest rate, people will not borrow more money. So money
More
in the
money.
market will reduce. So purchasing power will reduce and the demand will reduce. So
yes
in the case of recession, what will the central bank do? Reduce the interest rate. Recession means what? Recession means what? Supply is more, but there is no demand. Means demand is low in the market. So what we need to do? We need to increase this demand in the market, right, Sheila?
yes ma'am
To make the demand, we will reduce the interest rate. So what will happen if the interest rate is low? People will go and borrow the loan. Loan will be
Yes,
there.
ma'am.
People will get more money in their hands, more purchasing
ma'am.
power, and the demand will increase, right?
increase
Huh. So in case of recession, they will lower the interest rate. So this increasing the interest rate, decreasing the interest rate, the central bank is doing this, right? To what? So to control the availability of credit or the money supply in the economy, right?
yes ma'am
This is the most important function of central bank. It controls the volume of credit in the economy through appropriate monetary policy. There are various monetary policies and the central bank uses this monetary policy like increasing the interest rate, reducing the, also other monetary policies are there. We will see them further. Using these monetary policies, the central bank controls the credit in the economy. It takes steps to reduce the credit in case of inflation. Custodian of foreign exchange reserves. The central bank maintains the reserves of foreign exchange and regulates their use. It has the responsibility to maintain the stability of exchange rate of the native currency in terms of foreign currency. What we saw, if the rupee is constantly falling in terms of dollar, our domestic currency, rupee's value is getting lowered in terms of foreign currency, right, Sheila? In
Yes,
that case, when our value of rupee is constantly decreasing, the central bank will come into picture and it will take steps to stabilize the value of rupee
rupee yes
Okay. in terms of foreign currencies.
foreign currency
Now we will see distinction between the central bank and commercial bank. Monetary authority enjoys supreme monetary authority with wide powers. Commercial banks no authority, no such power. So the central bank has lot of monetary authorities and power, but the commercial banks do not have any power. Profit motive. Central bank does not have any profit motive because its motive is to help the government and lead to economic development, helping the economy and leading to economic welfare. But the commercial banks have profit motive. Money supply to the economy, the ultimate source of money supply to the economy. No such function is performed. See, lender of last resort means what? If there is no money supply is required either by the government, if the government requires the money, or the commercial banks require the money, central bank is supplying them the money. So the lender of last resort to the government as well as to the commercial banks. Services rendered, it acts as a banker to the government. Commercial bank act as banker to private industries and institutions. Commercial banks act banker to private institutions, whereas central bank acts as banker to the government. Chance of failure. It is the lender of last resort and never fail. It often undertakes risky business transactions and sometimes. So, see, if the reserve, there is no chance that the Reserve Bank of India will fail or become bankrupt. But there is a chance that any commercial bank like State Bank of India, HDFC Bank or Kotak Mahindra Bank can become bankrupt or late, because it takes into risky transactions, commercial banks. Service to public. It neither does accept deposits from the public nor lends deposits to the public. The central bank does not accept deposits from the public, neither it lends to the public. It only accepts deposits from the commercial banks. Central banks accepts deposits from the commercial banks and not from the public. It also does not give loan to the public. It gives loan to the commercial banks, to the government or to other financial institutions. While commercial bank accepts deposits from the public and gives loan to the public. Ownership and managing authority. It is generally subordinate to the state, state owned and state managed. That is, the central bank is state owned and state managed. That is, the government is the sole management of the central bank, that is the Reserve Bank of India. While the commercial banks are privately managed. Nature of operation. Nature of operation is what? The central bank has the role to print notes and coins in the economy, right, Shela? But the commercial bank cannot print notes and
Yes, ma'am.
coins in the
Yes,
economy. That is the currency in the economy, right? There is the
Yes,
difference.
ma'am.
Basis of operation. The basis of cash money issued is gold and foreign reserve. The basis of credit money generated is cash deposit. We will see this in next lecture. Fine? It's 5:51.
Yes.
Shela. Okay.
Yes, ma'am.
Okay, good. Clear up till now, Shela? Any no doubts, right?
Yes, ma'am.
Okay. Goodbye. Happy Holi, Shela.
Happy Holi, ma'am.
Goodbye.
Thank you. Bye.
Bye bye. Good evening.